GM. This is Morning Markets. Today is Thursday, the 11th of September. So, yesterday we got PPI inflation data. It came in much lower than expected. We actually saw disinflation, whereas they were expecting inflation to rise month on month, 0.3%. Instead, we actually got minus 0.1%. So, markets' initial reaction to that was positive, as expected, for risk assets. Core CPI and CPI is today. This tends to be more important than PPI as it's the consumer inflation, and the forecast is that year on year it's going to rise 2.9%, and that is increasing over last month's reading. So, really, what you want to watch out for is if we come in at 2.9%, then it's probably not going to move the market much as it's as expected. If we get a print that is, let's say, 2.7% or lower, well, now all of a sudden, analysts expected CPI inflation year on year to rise, but it hasn't risen based on the previous month. So that would be a big miss to the downside, and markets should price that in bullishly as they did for PPI. Of course, to the opposite side, if CPI comes in at 3%, 3.1, or 3.2, then markets are going to look at that and say, okay, so consumer inflation is still sticky, it is still rising, it is still a problem, and that's going to probably lead to downside as the Fed will then interpret that as, okay, we need to be restrictive for longer on monetary policy. So the Fed has a dual mandate, and this really decides how aggressive they are in terms of cutting rates or even going into something like QE. And it is based on employment and inflation. So the Fed wants stable employment, meaning unemployment rate is low. And at the moment, we're seeing the jobs data in the US, although initially it comes in strong, every month it's getting revised lower. Every month lower, every month lower, which actually means that there are less job openings than they initially thought in the data. So, starting to see signs in that getting slightly weaker, which is one reason for the Fed to cut rates. But the main reason, at least as of recent times, has been inflation. And that's what Powell keeps saying is stopping him from being able to cut rates and be looser on monetary policy. And therefore, what we really need to see is this CPI data to come in below forecast and show the Fed that inflation is in fact cooling down and that it's not sticky. And then you could see markets start pricing in, maybe 2 rate cuts at an increased probability in September and pricing in the potential for QT to end. So that is liquidity positive for the market. And these things are typically all great for risk assets. So watching that today, that's 12:30 p.m. UTC, 1 hour before the New York session. Could be a potential market mover, could be a nothing burger. Let's see. But PPI, that provided the big move yesterday. So Bitcoin closed the day above the 113.3K level of last week's high that I've been talking about, above the 50-day EMA, that purple line. So that should really set up Bitcoin to at least test this value area low. And then from there, as you know from Trade of the Week, I'm either looking at, okay, is this value area low going to reject on the back test and then look for potential reversal? Or alternatively, if we can actually flip the value area low, then we can start looking for longs towards the POC, towards the value area high, as that move should then start targeting some of these liquidity levels within this downtrend. And as I mentioned in yesterday's video, Bitcoin doesn't even have to necessarily be bullish to do that. It could end up simply being a lower high, but it still means you get a nice bounce. So now that we've got that confirmation, that is my bias. Obviously, if you flick to the lower time frames, you want to see Bitcoin hold above this level. As I mentioned, you don't want to see it start closing below, back testing it as resistance, as then you really enter this range again, and you're probably going to be biased towards downside if we do back test it as resistance and confirm. So really, you want to see this level hold. Shouldn't need to go below it now, because all of this consolidation should now not need to get retested if that accumulation was strong and the demand was strong. And therefore, it's yet to be seen, really, whether we can then break this value area low or whether we reject it. So, looking for a flip or, in this scenario, a rejection. Whether that just leads to a consolidation or whatever that leads to lower, I'm not sure, but that's the level to watch. It's this value area low to see the reaction and to also watch for this level to hold. You want to see Bitcoin stay above this 50-day EMA now, and that's going to then allow your lovely long setups across altcoins, which I'll dive into in a minute. So that's really it for Bitcoin. As you know, this week the plan's been super simple. Close below 110, then expect lower to target these liquidity and maybe even new lows. Didn't get that, and the opposite confirmation was close above last week's high, and then we should target the value area low, flip that, and we can start making our way through the range and target these liquidity levels, which are all currently untested. Shorts have had a free ride all the way down, and that can provide some targets to the upside if we can start flipping that value area low. But overall, want to see this level hold now, even with the CPI volatility. Yes, there can be big swings, there can be wicks both directions, but you want to see Bitcoin stay above this 50-day, ideally above last week's high, and then that's going to lead to the test of the value area low, where we'll then look for a flip or rejection. So that's really it for Bitcoin. Simple levels there. Of course, more interesting is the altcoins I've been talking to you guys about, like Solana. So we got the confirmation I said I was looking for yesterday. That was the daily close above this high over here. Smashed that. So what I then said I'm looking for is going to these lower time frames, which has triggered a trade for me. So playing really this H1 trend towards 240. You could even play it on the H4 as well. So I don't think Solana should go back below this level here. I think that high should hold, and that is the $218 high, let's call it, because what we've seen on Solana is a high with a fake out, another high with a fake out, another high with a multi-candle fake out. So now we've created a new high. Eventually it's got to go, right? You're not always going to have the pattern play out, play out, play out again, because traders start expecting it to play out. And when traders start expecting something to happen, when something becomes consensus in the markets, the opposite tends to happen. It's the same concept as when you test resistance multiple times. It makes it weaker, and the next time is more likely to break. And therefore, I'd be actually expecting this run to potentially have some big momentum towards 240. Maybe CPI catalyzes that. So that's what I'm looking at for Solana. You can look at this H4 trend. I don't think we should start closing below this 218 level. I think we should now just hold it and take it off towards 240. Keyword, of course, is should. Doesn't mean this is guaranteed to happen. Maybe we have another fake out today and a bad CPI print, and we have to go test these daily bands again, which have held time and time again, in which that offers a different setup, and the lower time frame setup would be invalidated then, and that's fine. We can get in again with then a new invalidation below the yearly open. But until then, I think we should have some momentum towards 240 before we close below this high over here, as I mentioned. So that's the high I'm looking at. It's this 218 level here. So that's Solana. Pretty simple. Mentioned it's getting all the attention because you're seeing ETH stall out a little bit here. So that means the Solana ETH ratio is having a nice bounce here. Of course, high time frame, bearish chart. What is this? Well, this right here is a clear sweep, reversal, attempt to build new highs, but actually forms a lower high. So you have this high, a new high, lower high, and then you see this structure breaks. You see the 50-week EMA break. And this is something I actually have been mentioning for quite some time now. Mentioned it in my channel as soon as this was breaking to look for Solana outperformance and Ethereum outperformance, and that's what we got. But downtrends also have bounces, right? So now Ethereum has tagged its all-time high. Now that Ethereum has triggered those sellers, you start to see some rotations, and even downtrends have bounces, right? Even downtrends have a move up before going lower and have a move up. It doesn't just go straight down vertical. And that's what you're seeing here. You've had a really high momentum move downwards, and you're just getting a nice bounce here, which allows Solana to outperform. And that probably ends up getting mean reverted later on, whether that's in a few weeks, in a few months, I don't know. I would watch this 50-week EMA here as a potential resistance level, as it was here. Once this 50-week EMA is hit, you're probably looking to exit longs on Sol, as it may be set to underperform. But of course, if we can flip this 50-week EMA, then that would be very bullish for Solana and continue the outperformance against Ethereum, even if it's just for a little more meat in the move. But that would be the area I'm looking at on the Sol Ethereum chart to decide, whether to exit longs on Sol, or if it flips, potentially you keep on holding them. So watching that level closely, because this is still a bounce in a downtrend. It still is a bearish chart, but Solana is outperforming for now. And you even see Solana against Bitcoin. It's having a nice move here. So again, what did you see? Classic reversal, sweep, and then you start to reclaim market structure, and now you see the outperformance. Charts can be that simple, guys. You don't even need all these magic fancy indicators, because price is king. So we look at this range here. I want to really see Solana reclaim that. That would be a key level. You also have this show of weakness. If you guys know Wyckoff distribution schematics, this is like the show of weakness within the distribution schematic, and interesting to see we're reclaiming that level already. This is like your automatic reaction after the first sell-off, which provides a new high. So pretty strong. Reclaimed this 50-week EMA here. If we can flip this level, then sets up for some more outperformance on Sol against Bitcoin, even if it again is just a lower high. Doesn't even have to be bullish to outperform. So, and I probably would expect that. I don't actually think this chart is going to make a new high above here. Maybe we tag those highs, but if you look at any altcoin against Bitcoin, even if it's ETH against Bitcoin, yes, they have their periods of outperformance, but what is this? It's lower high, after lower high, after lower high. So yes, we're bouncing on ETH Bitcoin, but you're just watching for a lower high to form anywhere, really. You look at anything, any altcoin you like, take your pick. Again, this is XRP against Bitcoin, so what do we see? It is low high, after low high, after lower high, after lower high, cycle on cycle. So that's the expectation. Altcoins, you want to trade them in a very particular period. And right now we're seeing that period where you've had this 50-week EMA hold the trend on Bitcoin dominance. You had the 12 and 21 bands hold the trend, but then you get your signal. After being patient for many years, the correct trade was Bitcoin throughout this period. Yes, there were some brief moments where altcoins had some nice outperformance, but it was short lived. It was limited to a couple months in Q4. Whereas now we have the weekly bands going red. We've lost the 50-week EMA. And this is, as has been mentioned, the best chance for an alt season. So that's what you're looking for. That's the same signal that we got in 2021. It was these bands going red. It was losing this 50-week EMA, and that set up this move. Now, I don't think we're going to get the same move this cycle. There's just too much token inflation, too many new projects, not enough liquidity to go around. But nevertheless, for those strong outperformers that you can identify through technical analysis, those are going to be your best bets. And the game gets harder every year, guys. In 2021, you could almost long any altcoin and it will go up. This cycle, not so easy. You have to have a little bit more skill, do a little bit more due diligence, actually use some sort of technical analysis. And that's what, of course, I'm helping you guys do in these morning markets. Identified Sol's been an outperformer for many weeks now. Posted about it in my analysis channel. We also have Hype, which has provided some nice trades this week from morning markets. Starting to see some momentum slowing here. So I mentioned we're seeing these big upper wicks that indicate some slowing momentum. And this morning we've already retraced the entirety of Wednesday's candle. So that's quite weak for a London session to retrace the entirety of yesterday's candle already. Therefore, even if we pump today, I'm now looking towards these higher time frame bands as my next setup for a long trade on Hype. So I'm actually going to just be patient, wait for these daily 12 and 21 EMA bands to start rising, and hopefully Hype can consolidate, potentially have a flush down before then making a move higher, and I can get long on those 12 and 21 daily bands, playing towards that 60 level, and the stop will go probably somewhere below this $50 level. That'll be yet to be seen. We'll have to see how price action evolves, but that is the trigger I'm now looking for. It's a retest of these 12 and 21 EMA bands, and they probably look more something like this, and in the coming days they could see a test, even if it's just a consolidation and these bands slowly catch up. That's where I look to get long and play the next move on Hype. And of course, you could also have a big flush today or tomorrow where you see it a bit more violent. That as well would be a valid setup for me and something I would like, as it would flush out a lot of the longs, which are most likely chasing a little bit here since we are stalling out and losing a bit of momentum. So 4-hour bands, they haven't been respected previously on any time frame, so I wouldn't be betting on these to be respected. Obviously, you've had a market structure break here. Go to something like lower time frames, not respecting this H1 50 EMA. So really, just go to your higher time frames, and that's where you then look for your next trend support. We had some nice trades already earlier in the week on the H1 impulse candle gap. That made a new high, then rejected. So now, see momentum slowing. Look for new signs to see, okay, are we now going to follow the daily trend on Hype? That's what I will be looking for. So that's it for altcoins. Obviously, if we quickly check the indexes just to see what the overall coin market is doing, we have now attempted a breakout of this compression pattern this morning. So keep an eye on that. Could be a catalyst with CPI to actually send this chart higher and keep the momentum with big green closes today. Watch for that. And of course, on the flip side, watch for a rejection. Price to close back inside this compression pattern today. That would be bearish, of course. Look at the others chart, so everything outside the top 10 quickly. Again, this morning we've tried to break out of this compression pattern. So far, a little bit of momentum weakness, but that can change very quickly when we begin with the New York session. So again, CPI could lead to this having a nice breakout. That's what you really want to see. Plenty of time consolidating. Should be no reason to hang about for too long here. Otherwise, you risk today or in the coming days closing back inside, and then that would lead to more chop, more consolidation. So that is everything really with crypto. If we want to take a look at gold, see what gold's been doing. Let's compare it to Bitcoin. So, mentioned yesterday that gold, it hit its 50 EMA on the H1. Mentioned that this was the EMA band to watch for to provide support, but we had to flip 3.7k. If we couldn't flip 3.7k, then I mentioned it's probably going to lead to more chop or downside, and we were unable to get anywhere near it in the New York session. That was, of course, because PPI came in lower than expected, and gold is a hedge against inflation. So when inflation data comes in lower than forecast, well, it's typically going to lead to downside on gold. And that's what we saw. So 3.7k rejected. We've got a down move. H150 is no longer being respected. So from here, you're now seeing a period where if gold can actually consolidate, this is when Bitcoin can outperform. And that's what you've seen the start of yesterday. This is what I've been talking about for weeks and months now. If gold can consolidate and hold up sideways, you don't really want to see this order block broken here on the daily. You want gold to remain strong because gold and Bitcoin, yes, they have different cause and effect paths. However, they do both move up and to the right at the same on over a length of time. It's just that different periods, gold trends up while Bitcoin consolidates, and when gold consolidates, Bitcoin trends up. So you don't actually want to see a breakdown on gold. What you really want to see is gold to consolidate here and remain strong and hold up. Because if gold starts breaking down and actually going down, yes, initially, that may be positive for Bitcoin, and this would be triggered with gold losing this order block and closing back inside of the breakout, which sets up a potential high time frame top here on gold. Well, if that happens, then yes, you'll get upside on Bitcoin. Yes, you're going to see a nice move, but if gold is topping out, well, since gold and Bitcoin have been moving up together on the higher time frame over a long period of time, well, if gold starts moving down, then question is Bitcoin, is it going to follow? And I would say it probably will, since that has been the trend. So you really just want to see gold consolidate and remain bullish, still go higher, as Bitcoin will then start rallying as gold consolidates. And then if gold goes higher, it then sets up the new base for Bitcoin to outperform in the next consolidation. So you still need gold going up. You don't want to see this chart just start triggering a false breakout here and potentially a cycle top. So that's what I'm watching for. Interesting to see how gold reacts to the CPI inflation data today, because that's going to be a potential mover for it. And really, you just want to see this order block then hold, and Bitcoin then will likely outperform. So that's what I'm looking at. If we take a quick look at stocks, let's see what's going on here. So yep, seeing a nice move, trying to break out above since we took the high of this indecision candle here. So playing out as expected. Stocks are trying to trend higher, and really anything above this all-time high at 6.4k is positive for stocks, and CPI is probably going to allow for some volatility here, swings both ways. But if it comes in lower than expected, then you want to see, does this continue higher? Do risk assets continue pumping? And then it's all eyes towards FOMC next week from there. So far, so good. Risk assets look like they're reacting positively to lower than expected inflation data. So watch for CPI. Watch to see how Bitcoin reacts. That's going to be 12:30 UTC, just 1 hour before the New York session. See these liquidity levels, yes, both sides can get targeted, both sides can get wicked if there's volatility. But the real move, you'll get more insight once the New York session is ended as to the real reaction to CPI. So those are the levels I'm looking at. I'll see you guys tomorrow.